Hi everyone, in this video I will explain why the probabilities on Bitcoin from an Elliott Wave point of view are highest for the scenario that you see on my chart, which is an impulse 1, 2, 3, 4, 5, after which we look for a bit of a retracement. In order to explain these probabilities, I will compare this move towards the upside with past impulsive structures to the upside. So let's then jump in to the first structure here, June 2023. Price made a low here at about 24.7k and moved towards the upside to 31.8k. But it's all about this first move here to the upside before we started a big wave 3, as you count this as a wave 1, 2, and then wave 3. Now wave 2 here is a shallow sideways range retracing to the 0.236 Fibonacci taken from the start to the end of your wave 1. You can also see that this range in time is about the same size as the move towards the upside because of the vertical line, which is a 1-to-1 Fib time taken from the start to the end of your wave 1. Now then we can also see, toggling on the volume, that wave 3 had the highest amount of volume in this impulsive structure to the upside, and the moment you got your wave 5 over here, right, 1, 2, 3, 4, 5, price made another high on a lower amount of volume, which is exactly what you want to see. Now keep this in mind. Then we go to the second impulsive structure to the upside, which actually is a double 1-2 after price made the low at 38k, and we move towards the upside to the previous all-time high here at 73.6k. Now in this particular scenario, right, we then have a wave 1, 2, 1, 2, 3. Now quite clearly this is a bit of a unique double 1-2, as commonly multi 1-2s have a bit of overlap between their 1s and their 2s before you get your 3 to the upside, but in this case there is a big impulsive structure between the two 1-2s. Now initially when counting this, you would count this as a wave 1, 2, 3, 4, 5, look for a bit of a retracement. However, the moment price broke out here with this candle, it immediately increased the volume, right? So you have the volume over here, the highest volume was this peak, then you have this impulse move to the upside, and volume was indeed higher in this structure to the upside compared to here, as I show here with this trend line basically, right? So we have a higher volume peak here compared to this move to the upside. Now most commonly the highest amount of volume is in a wave 3 in an impulsive structure, which means that if you work on a wave 5, you want to see a higher high on a lower amount of volume. But that is not what we got. The moment price broke out over here, price increased in volume, which means that the count immediately started to change. Instead of counting this as a 1, 2, 3, 4, 5, this became a 1-to-1-2. Highest probabilities that this move up is a wave 3. And then, of course, after a wave 3, what do we want to see? We want to see a 4, 5, 4, and a final 5 towards the upside. Now, in this case, you can see that the first wave 2 retraced to the 236 and almost touched the 0.382. And I know it looks like it did, but if we zoom in, I remember this vividly, we actually just missed out on touching the 0.382, right? It's in the details. Now then price moved towards the upside. It is, by the way, important to remember the first wave 2 retraced to at least the 0.236. Now then we moved up once again, got another range, which we label as a second wave 2. 1, 2, 1, 2, continuation up. This second wave 2 did not retrace to the 0.236. It's very rare for that to happen. The 0.236 by itself is not a very common target, but in this video I do pay special attention to these structures because of the local move we have up now from 74 to where we are at the moment. So price did not touch the 0.236. Very, very shallow retracement, right? Which is also the reason why initially you would count this as a wave 4, not a wave 2. It's just because of the volume that this became a 2 and you look for 3 up. Now, from a time perspective, if we compare this structure to the upside, so you have your 1, 2, 1, 2, 3, 4, 1, 2, 1, 2, 3, 4, 5, 4, 5, right? Your impulsive structure. You compare this move towards the upside with the range, then the low here was made about the 0.5 to 0.618 Fib time taken from the start to the end of the structure. So that is also fine. You preferably want a wave 2 to finish after the 0.382 fib time, which is the case in this scenario. Now, again, we keep this in mind. This is the low at 24K, and we moved towards the upside. Now, just for me to zoom out here to make it clear where we are, it's this structure, right? So we moved towards the upside, and then eventually we started moving sideways in the range that also included the Bitcoin ETF, right? So we are back at the low here at 24K with a multi 1-2, 1-2, 1-2, 1-2, and then a couple of smaller 1-2s, and off we went. Now, what is important here is that, once again, volume is increasing between the 1-2. So in the previous scenario, right over here, this second wave 1 has higher volume than the first wave 1, okay? Also here, we have our wave 1s, and volume is increasing. Volume in the first wave 1, peak volume in the second wave 1, in the third wave 1, right? And of course, here we have volume decreasing. However, this was that special, the intern hit the button for the ones that were there type of news post, right? So it had an incredible wick over here to the upside. So question with this particular volume, but in general, you can still see that this peak here is higher than what we had over here. So on average, your volume is increasing per 1-2 that you see on the chart. Then we can go to the low, 15K low. You have your 5-wave structure to the upside, finish wave 1 here, get your wave 2. Now this is like less common. Your wave 2 here did not reach the 0.382 fib time. If this at least is the end of your wave 2, and that's the high of your wave 1, right? Alternatively, you may have to end your wave 2 here, but you know, it's basically not really the point that I want to make. It's the volume. So price here moved towards the upside. Volume actually moved down. The highest amount of volume was in this move over here, which is part of your wave 1. So wave 3 had lower volume, and also your wave 5 here, of course, besides the peak, which is a red candle, but with regards to green candles on my chart gray, this volume over here, this volume peak was a little lower than the one we had over here. So price moved up, volume slightly decreasing, giving us a 5-wave structure and then a retracement. Over here, this is your multi 1-2 section, right? Which was very, very clear. So price moves up, you can see a lot of overlap, which is also something that we like to see when price is forming 1-2s, right? You're 1-2, 1-2, 1-2, 1-2, 1-2, and then eventually you move towards the upside. You have a couple more 1-2s, which obviously don't have overlap, but it starts with a nice amount of overlap. But more importantly, we can also see here, price increasing in volume as price is forming these multi 1-2s. And that then brings me to the current move. Now, when we look at the structure to the upside, we made a low at about 74K. The low created a move to the upside on peak volume. Now, at times when price is making a high or making a low, there is some shenanigans going on. There's a high amount of volume at the low or at the high. So at times it's a bit doubtful, like, do you include that in account? Is that like, oh, look, wave 1 has a highest amount of volume compared to wave 3? Bit doubtful because it is literally at the low, quite a wick here as well. So that's why I write low shenanigans question mark. Then this move to the upside here, like this structure, counts best as an ABC to the upside. So we have peak volume, but better counted as a wave C and not a wave 1, right? Now, with that in mind, these two volume peaks are not really counted as part of a wave 1 here. This is like the low, so like low shenanigans. This is a wave C, where then you would have 1-2, 1-2, and continuation up in the scenario that I showed earlier over here. So if we would kind of like disregard this, then the highest amount of volume would be in your wave 3, right? If you include this, by the way, volume is going down all the time, right? So you have the highest volume, lower volume, lower volume, lower volume. Volume is just moving to the downside. If you disregard these peaks, then at least you have the highest amount of volume in your 3, right? You have your wave 1 volume, your 2, your 3, and then eventually you move towards the downside again. So it is important to note the volume is moving down. Now, based on the previous moves, comparing it with what we see here, there's a few conclusions, okay? So the previous multi 1-2s followed by big moves, right? Big wave 3s, showed volume increasing inside the new wave ones, right? So that is something we see most often. Prices making 1-2s, and the new wave ones tend to have higher volume than the previous wave ones. The wave 2 always went, or the first wave 2, always retraced to at least a 0.236 or deeper. The wave 2s ended after the 0.382 fib time, except the one at 15K. If the high was the 18K and the low is the 16K, that one ended before. But it's most common to see a wave 2 end after a 382. It's most common for at least the first wave 2 to hit the 236 or deeper, right? It is very rare for wave 2s to not even hit a 236, but in this video, the only example that didn't touch the 0.236 was this second wave 2 over here, right? Okay, with that in mind then, we look at the structure. Now this makes most sense from an Elliott Wave point of view. We have our 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, right? We get a couple of 4, 5s, 1, 2, 1, 2, a small 1, 2, then we get our 4, 5s. Now, from an Elliott Wave point of view, you like to see volume decrease as you are working on your wave 4s and 5s. Just like you see here, you have your impulse to the upside, you create a 5, like a 4 and a 5 on decreasing volume. And yes, a range can be very shallow, right? By no means do you need to go all the way to a 786 retracement, right? We retrace to the 0.236 in this particular case. But it's best counted as a 5-wave impulsive structure with the volume declining here as price is moving towards the upside. Now, if we would look for a 0.236 retracement, let me quickly remove this here, right? If your wave 4 is finished here with then a running flat in 4 and then look for a final wave 5 to the upside. So in that case, you have your A, B, C running flat, right? And if this is part of your wave 5, maybe you get some sort of a diagonal. Be mindful if you do that a diagonal can end on a high amount of volume, right? In your wave 5. And we have a bit of resistance still at 109, so just something to be aware of. But if we would take a Fibonacci from the low to the current high on the chart, then your 0.236 here is sitting at, so that would be a minimum target, at 100K. Okay? So that would be your minimum retracement target, right? If we look at the wave 2 targets, the 236 being minimum, right? Absolute minimum. It's not a common target, by the way, but of course in this video I highlight the 236 because of things that happened in the past. So that's one to keep in mind. The 382 is a common like minimum target. This is your most common retracement target. And then you have the 86, which you definitely don't want to hit. Now, if you take a fib time from the start of this move to where price is now, and you toggle on the 0.382, which I have here on my chart, then you can see that preferably if you finish this move to the upside and you finish a wave 5, you continue going sideways in a wave 2 or a retracement, but you at least preferably go sideways / retrace till the 7th of June, 2025, which is still a little while, right? Okay. Now, how about this then? A finished impulsive structure. 1, 2, 3, 4, 5. In this case, we count a diagonal in wave 1. Now, mind you that a diagonal in a wave 1 has lower probabilities than counting multi-1-2s. As per Elliott Wave Theory, it's literally written in the book, right? A diagonal has lower probabilities than counting multi-1-2s. So initially, probabilities are always higher for a multi-1-2 compared to a diagonal. Only in hindsight, if you miss out on another 4 and 5, do probabilities go down for a multi-1-2 and you count a diagonal. Trading-wise, not much changes because the 1-2s is always where you enter, the 4-5s is always where you exit, basically. No financial advice, you do you, right? But no, that's just trading Elliott waves. So here we then have our end of wave 5, right? 1, 2, 3, 4, 5. Then you have your running flat, right? But this should be the start of then a bigger corrective structure because you finish a 5-wave move. So now you're working on either a B or a 2. However, price now touched the 1.618 taken from this pivot to the low, as this then counts best as an ABC with the wick being a B. So that's the end of 5. So that's where you pull the fib from, right? So you pull it from here to here. Price touched the 1.618. The problem with this from a probability standpoint is that for a wave B or a wave X, the 1.618 is a very rare target. Like it significantly lowers probabilities. You're looking at a B or an X here with this high. But that therefore means that the probabilities are low. This impulsive structure is correct. Because preferably after this first flat structure, you get maybe a continuation of the range sideways, and then you get a deeper move, right? Maybe a W, X, and then a wave Y, with wave Y being a zigzag. You don't like the 1.618 to be touched, because now you have to think, well, is this first structure maybe a wave A, or then a B and a C, a bigger flat? The problem is B touched the 1.618, significantly lowers probabilities. Can this be W, X, Y? Well, X touched the 1.618, lowest probabilities. So therefore, this scenario does not have the highest probabilities because of the 1.618 that is touched earlier today, right? Now, still, at least thinking about it, right, you still preferably see a retracement to a 236 minimum. In this scenario, it would be 97. Again, lower probabilities for this scenario. And preferably you end it at least after the 382, which is the 23rd of May. But it has lower probabilities compared to counting 4 and 5, right? Because of the 1.618. Then we get to the multi-1-2s. Your most bullish Elliott Wave scenario. This is about to be a long video, but sometimes it's the way it is when I go into detail. Hopefully you enjoy it though. So here we look at multi-1-2s. Okay, so we have our first wave 1, which internally is then 1, 2, 3, 4, 5. Right, cool. We have a diagonal here in 1, fine. Then you have 2, 1, 2. You look for a big wave 3. Wave 2. Your first wave 2 did not touch the 0.236. In all the previous examples that I showed, there was no first wave 2 that did not at least retrace to a 0.236. This one didn't. Low probabilities that this is correct. A double 1, 2, 1, 2, 1, 2 continuation up. Besides, of course, your second wave 1 here. Right? A second wave 1 on lower volume, not increasing volume. It's not a requirement. It's not a must that we need to see a second one with higher volume. But if we compare the current structure based to two old structures, it is just something you see most often. And this is then your multi-1-2, right? If we compare the two 1-2s, being this one and this one, then this one would look better. Because at least price retraced to a 0.236. It did so 3 times in a row. And the 236, right, it remains a not common target for a wave 2, but it is, at least a target nonetheless. No? So we have the first wave 2, touch the 236. Second one, 236. Third one, 236. However, here again, volume declining in your latest wave 1, right? And if we compare it to structures back in the day, and here we have volume increasing. So this is your first one, second one. This peak is higher. Let me move the trend like this. So we have a higher peak in the second wave 1. Also over here, volume between this is the first one, volume. Second one, higher peak volume, right? Third one, higher peak volume. Okay, you see volume increasing on average. This one is doubtful. You can take this one. Nonetheless, volume is increasing per 1-2s. Over here, price moving up. Volume here, right? Look at the volume once again, okay? Increasing, right? As price is moving towards the upside, right? So that is just something that I have in mind when I did my research this morning, right? And in this particular case, you have 3 1-2s, which would be, of course, incredibly bullish. None of these 1-2s overlap at the moment, which is, of course, something that we do like to see. A couple of 1-2s, and then you get your 3 with overlap between the 1s and 2s. It's just most common. It is definitely not a must, but it is something you see over here as well, right? It starts with a lot of overlap. Mind you, it's actually something that we haven't seen, or that we have seen not too long ago over here as well. These are also your 1-2s, right? With beautiful overlap as well. People count diagonals. Diagonals, lower probabilities than 1-2s. Price moves to the upside in a wave 3. So it's difficult to give this the highest probabilities, right, from an Elliott Wave point of view. So that then brings me to the second set of conclusions. So conclusions based on the local structure, keeping in mind what we did with the old structures. The current move up so far has volume decreasing in this final structure compared to the move before, right? Locally, price is moving quite high to give the highest probabilities to an already finished. Locally, price moves quite high. Oh, wait, that is this one here. I'm almost confusing myself. So the 1.618. Locally, whoops, price is moving quite high, right? Making it difficult, by the way, to give the highest probabilities to a finished 5 waver because price touched the 1.618. That's just basically what I wanted to say there. And an impulse to the upside with 4 5s to end would look best. And this remains unchanged because in the previous content, I've been talking about counting this preferably as a multi-1-2 compared to a diagonal, which would lead to another 4 and a 5 as per previous content as well. So that remains untouched. But after a 1, 2, 3, 4, 5 wave structure, we do preferably see a retracement to at least the 0.236, right? Minimum target, and finish after the 0.382 fib time. Now the 0.236 at the moment with the current high would be at 100K, right? As a minimum target, by the way, right? Keep that in mind. And from a time perspective, we would end, or preferably end from the start to the current high on the chart here. It would preferably be at least till the 7th of June that you're correcting sideways / get a bit of a bigger retracement. Now, locally, this move might not be finished, right? Your wave 5, there's the potential for an ending diagonal. Samith also posted it in Discord earlier today, and so did I think about this as well. 1, 2, 3, 4, 5. Mind you that with the diagonal, your wave 5 can end on a high amount of volume. We still have some resistance. You have the liquidity of the all-time high as well, right? Which can create a bit of a fake out. But at the moment, this is your highest probability Elliott wave scenario on the chart, right? That's that, right? So based on all the Elliott wave rules and guidelines, can't make it better or worse. That's just the case. So Thursday, May 22nd, we have some news. If we look at the news here, 4 p.m. Central European time, which is tomorrow, make sure you trade safe, and it might increase the volatility on the chart. And if we then look at the probabilities, then on a very high time frame, like on the weekly time frame, yeah, probabilities are highest to take out the all-time high, right? We also touched the 886, right? Taken from all-time high to the low. 886 is touched, increasing probabilities to look for continuation at a later stage anyway, right? So that is something to be aware of. So on a very high time frame, sure, we're looking for continuation. But if we look at this structure to the upside, right, then an impulse to the upside where we finish 4 5s at the moment has the highest probabilities. And I don't care if price moves to the upside in a wave 3 because we are aware of that scenario. It just doesn't have the highest probabilities. It's an alternative. So that is why if price would move up significantly with volume increasing, right? Move up significantly, volume increases, then we have to consider multi-1-2s and the potential of a wave 3. But at this moment, based on Elliott Wave Theory, the comparison with things in the past, the local structure towards the upside, there's no argument that will convince me that this structure to the upside is a higher probability multi-1-2. Just does not work, right? Can it be a multi-1-2? Sure, but that's going to be hindsight counting when price moves up in a very impulsive wave 3. And also when you do get strong acceleration and start moving. I got this question yesterday. I just want to make sure I cover it here. And if you are not part of any move, right, just wait for a range to form. There's always going to be another low time frame range where you can join a move or wait for a higher time frame range, right, and look for a couple of 4 5s. Yeah, you still look for continuation. But that is like still everything that I just said is alternative because at the moment, this here on my chart is the local highest probability impulsive structure to the upside. That's that. Just a little bonus for the ones that made it here all the way till the end, or in case you just skipped everything and went to the probabilities. Still, thanks for watching. This structure to the upside, alternatively, of course, is part that's your bearish scenario on a high time frame, which is a flat. So, of course, bullish on the weekly. Yeah, you take out the all-time high, but I didn't say necessarily impulsive continuation, right? So, of course, bullish would be to count 1, 2, 3 to the upside. Bearish is either count A, B, C down in a bigger flat, A, B, C. Alternatively, this is like a W, right? You have an X and you have a Y. Sam, Brandy posted this in Discord as well, which is indeed a bearish scenario, but at the moment not the highest probabilities with the current structure that we have. Right, but at least be aware that on a very high time frame, a bigger flat is a bearish scenario, bullish scenario is continuation. It's not yet very relevant for me to talk about these two options on the higher time frame because the lower time frame at the moment is a lot more interesting. But at least I suppose you're now aware. So very long video. It's quite rare for me to talk this long in a video and provide an update that is this much in detail. I just wanted to make sure to include my research that I did this morning with previous structures where price moved significantly towards the upside and how the 1-2 started. And when we compare those 1-2s with the retracement in the 2s, the volume in the 1s, etc., and we can then put that information on top of what we see here on the chart, then this is the end result. So hey, hopefully you enjoyed this video and it was valuable or helpful to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.